Here we are, episode 9, and we have Ashley here with us today. Super excited that you could join us. Ash and I know each other, well, for the last couple years. We had one of those kind of... I feel like all of my stories when I meet people are like the same. I come on like really hard and just start like hanging out with these people and inviting them to go do things. Like same thing with you and Leah. Like
that's why you have such great friends, because you're like, I want you and I want to be friends with you.
Yeah.
There you go.
Yeah, we're going to hang out. Yeah. We're going to do shit together. Yeah. We're going to have,
We did
and Ash and I, she called and said, I see that you've got this house open. Do you want me to show up? And I was like, yes, I do, because this house is very scary. And I need somebody else there in case the homeowner comes back and has another psychotic episode during the open house. So this is great. This is great. Yes, please come with me.
That's a way to make a friend.
Right? Yeah. Okay, so will you tell our listeners all about who you are and explain? Ashley is in lending, so it's a little bit different than Sarah and I. She has a different perspective that we wanted to bring to the table. And unlike some of the other lenders, Ashley is in a different kind of role. So let's start with, how did you get into lending in the first place?
Yeah. Okay, I'll take you way back to when I was about 7 years old.
I love it. I love it. Yes.
It goes way back. I just remembered when I was really young, I wanted to wear a power suit and I really wanted to be successful in business somehow. I had a grandfather that was an officer in banking. He was an investor as well, and I really looked up to him. So since then, I mean, I really, started off as the banking role of, teller and then member consultant and investment services associate over at BECU, which is a mega credit union now, but it was a smaller credit union at that point. I worked for a larger bank as well and got my feet wet in the more higher pressure sales roles. Wasn't quite for me. I want to say I'm in a sales position as a mortgage loan officer, but that's not my focus, and I don't feel like I'm amazing at sales, right? I'm amazing with people.
Yeah, I think that that's true in our area as well. There are some people that really, really push the real estate, and they're working on doing like 100 deals a year. For me, that is not a goal of mine. I want to have like the best clients, you know?
Yeah, I'm in the business to get to know your family. I want to know what passions you have and what's important to you. Vice versa too. It's a two-way street as well. So,
those companies just didn't align, and I think that that's kind of how we felt when we were at Compass. Didn't align with like the way that you want to do your business.
And it takes time to figure that out. You've got to try out the other things to figure out what doesn't quite fit.
I would just say those roles definitely grew me into where I am now. I mean, taking all that, taking all that experience, moving forward. I've always had the entrepreneurial mind and the creativity that comes with it as well. I always love the amazing ideas that I come up with that can be crazy sometimes, but fun,
Yeah.
Hopping into the banking role, growing my own family as well, taking a step back and saying, what's my next step? What do I really want to do? After I had children was really when my mortgage interest came up. I really, I wanted to be part of a bigger process, like a bigger process that I see from start, and then we get to tie the bow at the end and hey, you made it into your home,
It's life-changing, right? It's
it really
so
is.
different than doing a different kind of investment, because all of a sudden you have changed this person's whole trajectory, whole future. Yes. I always call myself a housing doula.
That's right. I think I've heard you say that.
Because you're birthing them
very
into
accurate.
A new life.
And Troy on our last episode was saying we're sort of like therapists as well. He may have said that off camera, but that's also true.
Absolutely.
But yeah, you're there from the start. I mean, I tell my clients like, oh, you want to buy a house? You're interested? Great. Your first step, talk to a mortgage loan officer. Because like I can get you in the house, I can get you through the contract, but I can't I cannot tell you exactly what to do with your money. They can. And you are truly the first step and the end, because you see them through until the closing.
And you can work with these people throughout their entire lifespan. Ideally, you would see somebody at the start of their first home, and then their second and their third, and it's so inspiring to see how one decision led to the next, led to this amount of economic growth.
Absolutely. Of someone who trusts you with their huge investments, the major life decisions there, right?
Yeah.
So
money's delicate.
it is, and it's a touchy subject for a lot of people.
Yeah.
I mean, I get first-time homebuyers who connect with me for the first time on the phone, and you can feel the hesitation, to release certain information, and just saying like, hey, what is right for you? I'm here, whatever you're comfortable with, right? So.
Do you think that's generational though? Because I have a feeling that it comes from our parents not discussing money with us, or our education system not discussing, like, these are all taboo topics. We don't have anywhere in our curriculum where we're teaching people how to apply and get a mortgage for a home.
Yeah.
And
or do your taxes.
Right, or do your taxes.
Which everyone's going to do eventually, whether you buy a house.
Why don't we teach it?
Yeah.
But I think that it's kind of so that this guise of it being so scary and a problem. I've had people come up to me and be like, oh, our money's all in a trust. There's nothing we can do to get a home. And it's like, I know that is your limiting belief. That you're putting in, and that's okay if you're not ready to talk about it. But there are so many different options, and just because this is how we were taught to handle money and talk about money doesn't mean that has to be the direction you take moving forward.
Absolutely. Yeah.
We're trying to talk to our kids a lot more about money as a shift. And now we're getting into this, like, we have to tell them, it's rude to ask, like they will walk into a house.
Because now they want to know
like,
everything.
Yeah. How much does this house cost?
That's so great. That's so fun. I'm glad that you guys have those open conversations, because there's a lot of families that just don't talk about finances and things like that. I mean,
it was a zero conversation in my family growing up. Love my parents. Shout out to them. Absolutely,
it's cultural.
Not a single conversation. I'm talking like well into my late 20s.
Yeah,
I was a full adult by then.
Yeah.
Which obviously I'd figured some things out on my own, but I'm talking like no conversation. So I'm hoping that's sort of like the last generation that's a thing for. Yeah. Well, nowadays, I mean, kids, you've got apps for money for all of you, got cards, like, we didn't have all that, but.
And they Google everything.
Yeah.
Now chat GPT.
Like, information all of that. More available now than it has been, but I think there are some cultural norms that we still have to swim against, both in your business and in ours. Okay, so how is I know that you talked a little bit about being in the big banks, but now you're not. So talk about that a little bit, because you are different than somebody that comes from a mortgage lending company. You're a mortgage broker now, right?
Yeah.
What does that mean?
Yeah. So, believe it or not, a lot of people in our industry don't know what it means, and so
I know.
I was asking Emily. I was like, I'm not sure I know the difference exactly. I was like, well, what company does she work for now? So I'd love to break it down what the difference is.
Yeah, I sat down with a sweet lady just the other day ago, and she's interested in getting into mortgage, and so I had to break it down for her, and I was like, you know what, this is a great way of explaining it. So we have what we call retail lenders. So they're your mortgage lenders, right? We have, and I worked, in that area before. There's like Guild Mortgage, cross-country mortgage, right? So they're a mortgage lender. They are under a structure where they use their products and services, although they are still able to kind of pull in some different lenders who they can broker out to, so they can work with them, right?
Okay, so let's think about it like this. It's more like a Nordstrom, where there's a lot of Nordstrom product in it, right? But you might have a Vuori pop-up in Nordstrom, so you might have a couple products of Vuori, but you can't get all of the Vuori line, right?
Exactly.
They're pushing out a specific item that they're trying to draw your attention to. Okay.
Yes.
That's the best example ever.
Yes, that was great. Okay. I'm going to use that. I'm going to use that now. Because that's exactly how it is. And then you have the big banks, right? The big banks, we have Chase out there, I call them the jack of all trades. They're going to have your consumer financing and auto, personal loans, things of that sort, but they also have mortgages, right? So they're going to have their own products and services as well.
Chase loans is probably going to be more expensive because they have so many different areas that they're trying to service. They're not focused on reducing their interest rates on mortgage loans because they're trying to manage all these other investments.
Correct. They, every once in a while, like even BECU, I could call them a big bank at this point, right?
Sure.
They do have a couple great programs that people are just like, wow, this is too good to be true. So every once in a while they'll have like this amazing program, which is awesome. But you really do have a lot of people dipping into that pot during the whole process. So communication can get a little lost in the process. But yeah, they definitely have their products, right? Where you go to a mortgage broker, I'm still a regular mortgage loan originator. I do all the same things as the loan officers out there, right? But I'm kind of like this matchmaker. So think of me as I'm listening to all your goals and what you want in a mortgage. And then I say, great, okay, well, I have 100 programs with all these different lenders. Now I can help, match them up to that lender and that program where I'm still going to be walking with them all the way down to the finish line. I'm still working with them and that lender.
So you are like a special shopper on Amazon who says, I see that you have been interested in looking at these products. This is what I would recommend if these are your needs.
Yes, absolutely.
And I will help you navigate this process moving forward.
Absolutely. So I have so many more options to be able to choose from. And when I also have those relationships built in with each lender.
Yeah.
I'm with C2 Financial. It's a brokerage, right?
Okay.
So if you think of where you guys hang your license, it's kind of like I hang my license at C2 Financial.
Okay.
And I'm independent.
Okay.
So when I work with people, I always have on top of mind, I want to get you the best rate, but I want us all to work with a solid lender. I'm not going to pick just any lender.
Right.
Because we also have a great web page for our C2 Financial loan officers where it's called The Good, the Bad, and the Ugly.
Yep.
And I get to see who doesn't have a good track record. I'm not going to choose that lender, to work with for my clients. So
I imagine it's probably overwhelming, right? Because when you work for a specific company and they're pumping out certain products, that's kind of what you have to look at. You say, okay, these are my buyer's needs. They're looking to sell maybe before or after they buy. So I'm looking at bridge loans. These are the bridge loans that I have access to. Whereas when it comes to your options, there are so many more that are available to you on the open market. Because what a lot of people don't understand is when you get a mortgage with a company like Cross Country or Home Street, what they end up doing is they're going to have you sign an escrow and then that mortgage gets sold
pretty quick.
Very quickly, right?
Yes.
They are not going to be the people who, and that's what's going to happen down the way anyways.
I always say this in life, nothing in life is permanent, right? Like I have, first-time homebuyers, is my loan going to be sold off? It's a very common thing nowadays. Like I don't know many people that don't have their loans sold off.
All of them are sold off, and you have the option to look at all of these different products and say, okay, whereas Home Street might have only had 2 or 3 options, I have 15, and maybe 5 of these are actually going to meet my client's needs. And so I imagine is it overwhelming?
No, not really. At first, yes.
I bet.
Okay, that there's a big there's a fear when you go into becoming a mortgage broker. Everybody says it. Everyone in retail lending says, "Oh, it's so hard. It's there's a lot of arm and leg work up front.
You're never gonna make it."
Yeah. I wouldn't recommend it. It might not be worth it, right? And I'm like, well, I don't want there to be someone to dictate my success and how I run my business, because I know I run my business with my heart, and I hold a lot of integrity as well. So I know I can do that, but it's like when you first start off at a brokerage, you just know you have to know your resources, who you're going to contact.
Right.
I have my contact for each lender, and they want to help us as much as we want to help our client.
Right.
So just being able to know your resources and know how to read guidelines, know what to look for, have experience in common things that might not, maybe more scrutinized when it gets to underwriting, and just know, what to really look out for. So it is overwhelming at first, but then once you're like, oh, it doesn't really have to be.
Yeah.
Because I know how to help my clients. I know what
Well, and
to
after
do.
years of analyzing loan products, you're like, okay, I know that this one looks better than the other one. However, at the end of the day, this one will serve their needs a little bit better. You already have that expertise.
Right. Yeah.
You're probably able to serve even more broad range of clients now that you have more options to choose from too. What you're saying about not being dictated by, the team or the company that you're on is so similar to, starting out as an agent. A lot of the agents start out on like a team, and you're sort of,
We did.
Yeah, we did. We started not on the same team. We started on a team. You're sort of, beholden to what the team expects and how the team dynamic works. And then eventually most agents move on to be, a solo agent, like here at Keller Williams or wherever. And it's not dissimilar to that. You sort of have more control over how you can serve your clients to your own personal level of satisfaction.
We just don't like to be controlled.
I think most people go into any of these businesses
Wildly, yeah.
feel like that.
I feel like yes, it's definitely the flexibility, and it's that entrepreneurial, role of being able to have that creativity, being
Right.
able to market how you want to market towards a certain group that feels passionate to you. So, right.
I listen to this podcast called Manifesting in Real Estate, and it's all about how, the way that you look at the world, the way that you look at your clients, it's going to affect how many people want to work with you and refer you. And that's always been kind of my passion. I don't want to spend a ton of money on Zillow leads or at Redfin, putting my face out there to a bunch of people who don't know me. I'd much rather work with the people who know me well, who trust me, and who want to do business with me. Now, not everybody's going to be on the same page, and that's okay. And that's kind of what we all had to learn. And isn't it? Look at us now, you guys, unshackled.
That golden rule: I want to work with people who want to work with me.
That's right.
And they should want to work with people they want to work with. None of this forcing who you have to work with and pigeonholed.
And being okay if they don't want to work with you is a big deal. That takes a lot of growth within, right?
Yes.
Just being like, hey, it's okay. I'm not for everybody. They're not for everybody, right?
What is the most common question or concern that you hear from buyers and sellers?
Yeah, so buyers is rate.
Affordability.
Affordability and rate, and how much do I qualify for, or how much could I get approved for? Those are, as much as it's a simple question, it's a concern to a lot of people. A lot of people don't take that initial step to reach out to a lender because they just don't think it's possible, right?
Which is why I tell my clients, hold, let's put a stop, pause. We're not going any further. I love that you're interested. Talk to a lender. Figure out what you can do to get yourself in a better position, or maybe you're already in a great position, but you've been sitting back thinking that you weren't. Talk to somebody who can confirm or deny those concerns for you. So that's always you are step one for my clients.
Step one, being able to make that step, and then for sellers, I would say the concerns, on the other side, when I'm working with a buyer and then I have a seller over here working with their listing agent, it's always like, are you going to be able to close this loan? Are these buyers, how is their credit? I've heard that a lot from listing agents is, how's their credit? Do they have the down payment? Is it available? Things like that. And there's, a certain amount of information, certain extent that I can share with them, right? But those are concerns.
So for the listeners that are listening out there, what Ashley's talking about is when we go and write an offer and Sarah and I send the other agent information about our clients, one of the things that we have to include is a pre-approval that stipulates that the clients that we're representing have the cash in order to close on this house. And so if then the selling agent is going to do is they're going to go and say, okay, this loan is originated by Ashley. I'm going to give her a call and see if they've really done the due diligence and how long ago was this issued, how does their credit look. So that's what she's talking about a little bit, those reference checks. Okay. So how can lenders help with affordability? What are we doing out there to help with these price points? Because we just filmed an episode that talked a little bit about how unaffordable Washington is. And it's only getting a little bit worse, right?
Right, yeah. I mean, appreciation is ongoing, and it's real. I mean, we're seeing it. Everything just increases, right? It appreciates. So as a lender, what I can do to help with affordability is just knowing programs that can help with down payment or programs that require less down payment.
I feel like a lot of buyers that I work for, maybe mostly first-time buyers, don't even know that that is something that you can help them with, that kind of financial advice. They see it a little bit more black and white. They're like, I'm going to tell her how much I have for a down payment, and then she'll tell me how much house I can afford. And I tell my clients, talk to them early, because maybe there are some things that you can do now to set yourself up better for 6 months down the line, whether that's refinancing your car payment, or maybe you don't need all of that down and you should reallocate some of that to pay off part of, I don't know, your student loan, or something that's going to help with your approval amount that could really benefit you. And I think that's something that they don't know that you can help them with. So that's fantastic that you're sharing that.
Yeah, I have the ability, I see the whole big picture, and a lot of people, a lot of first-time homebuyers or second-time homebuyers just believe that I'm there to say yes or no.
Right.
You know, yes, you're approved. No, you're not quite ready, but
you're fucked.
Yeah, like, hey,
We'll have to put
not
an
a
E on
chance.
this episode now, because it's officially explicit.
I mean, I've definitely had those clients in the past where I'm like, whew, this is going to take a while, right? But really looking at credit, even by helping them with a credit rescore and working through that process
That's
to
what I was thinking about.
bump their credit up.
Yeah. Can you make your credit a little bit better?
I was just talking to a client about this.
Something.
Yeah.
Bumping. I helped a client in the past 30 points in 2 weeks. We bumped their credit score up 30 points. Do you know what that does for a rate? Helps bring their rate down.
Yes.
It puts them in a totally different
I just had this conversation with somebody. I told them, go talk to your mortgage loan officer. They can help.
So lower rate, more affordability. So all those things can really help. And, I mean, it could be extending out a loan that somebody has. Maybe it's refinancing and extending it out, or doing a consolidation on all your student debt, things like that. Because there's just so much. For me, when I work with a new client, I also look at and ask those questions of, are you working with a financial advisor? Oh, you're not? Okay. It's a great idea to make sure you are talking to someone, or a coach.
Right.
Do you have an estate attorney for when you do make that huge purchase and you want to protect yourself and your property, So there's just a lot of ways that a lender, I can help open up the doors for people, and really beyond the affordability, right?
Right.
So
one of the things I had to learn about when I first got into buying a house was points on a mortgage.
Yeah.
And this is something that people don't understand. They don't talk about. And we use it a lot when we do negotiations. So if I had a buyer who was under contract, had an inspection, and we found out that, oh, look, there's $20,000 worth of repairs that we have bids for. We don't want you to do the work, but we would like you to credit us at closing for closing costs. One of those things that a buyer could negotiate for would be to have points off of their loan. Can you tell us, what is a point? How much does a point cost? And how can buyers utilize that to negotiate their price down?
Yes. So yes, points are big. And a lot of people don't understand, right? Someone hears the word, and I teach this in one of my first time homebuyer classes of like discount points. Don't think it's a discount.
Right.
It means you're paying to discount and bring your rate down, right? Like think of it as you're paying to discount your rate.
Think of it as you are paying for your Costco subscription so that you have access
To
these
cheaper products.
Yes.
Yes.
Exactly. But you still have
Yes.
to pay every single year in order to go to the store.
Right.
Same as a point.
Yeah.
Just
Yeah.
like Costco.
Just like Costco
It's like
and
Costco,
Nordstrom.
and it's like Nordstrom. Yeah, here we
Yeah.
go. It's only 2 places you really need.
we know you like to shop.
If a buyer elects to do that, how much does it cost?
Yeah. So one discount point, think of it as 1% of your loan amount. So when you're buying a home, you have a certain purchase price minus your required down payment, and that's your loan amount, right? So it's going to be 1% of that. That's one discount point. Where that's going to get you on the pricing sheet kind of just differs. Sometimes there's sweet spots when I'm looking at pricing for a rate. Because if you hear the word pricing, some people are like, oh, what do you mean pricing? It's a pricing sheet really, because I'm looking at what it's going to cost a home buyer to bring their rate to a certain point, or if they want it at par, meaning no cost at all. 1 point could bring them down by, 0.75%. It could be less than that.
Okay, so 1 point does not actually equate to 1 percentage point on your interest rate, which I think can also be very confusing to a lot of folks.
Yeah. Yeah.
And you're paying 1% of whatever your loan value is for that 1 point. So let's say I put $200,000 down on $1 million home. My loan is for $800,000. My 1 point would cost me $8,000, correct?
Yes.
Okay, and that might get my rate reduced a little bit. For how long?
It will, well, if it's a permanent rate buy down, that's going to be for the whole term of your loan.
I think that kind of takes us into our next question.
Yeah.
How do you negotiate to get that rate? I guess what are the restrictions around how much money a seller can pay towards a buyer's rate buy down?
Yeah, if they're looking to go conventional on a conventional loan and they have a certain amount of down payment, a seller could contribute seller concessions of up to 6%.
So a seller can participate, can kind of sweeten the deal for the buyer by saying, hey, I understand that you are maybe a little bit hesitant. I will, and for us agents, we see this on the back end that they are offering a buyer rate down, a buyer
Buy or buy down. Yeah.
especially when it comes to the new construction homes. That's kind of one of the perks of buying new construction is they can buy down the rates so that they keep their same price point.
Yes.
That way all the homes are selling at the exact same price point. But each buyer might have a different program depending on how strong the market is at that specific time. So if it's more of a buyer's market, then the construction owners are offering more of a rate buy down, whereas in a seller's market, they're not going to offer you jack shit because they want you to pay the top dollar.
Yeah, because on the consumer side, it looks like the house sold for say $700,000, but maybe that new construction home actually offered that buyer $15,000 towards their rate buy down. But it looks like the home sold for $700,000, but they didn't net $700,000. It sold for $685,000,
And you'll never know.
and you'll never know. We can see it on our end.
Yeah.
Sometimes
Yeah,
that's the
no one will
information
know.
that we can see, but that's not the consumer-facing side. But those have been really helpful. I know for my clients when sellers have paid, money towards buying down their rate, whether that's, most of my clients choose a temporary option because they hope that in 2-3 years when that rate has come back to their full amount that they will be earning more so they can afford that. But that's been super helpful for my clients in the past.
Yeah, it's very attractive right now. Well, while we're still in that higher rate environment, right? I mean, it's attractive to the sense of they do anticipate to refinance down the road, whether it's the next year or the next 2 years. So a buyer could do the select the temporary rate buy down option, and then 2 years after their rate adjusts back to their permanent rate, then they could look at refinancing, and then they potentially are in a better position.
Please make sure that you're talking to somebody who knows about different products like Ashley, because I think it's really important for you to understand that what you've been told might necessarily not be the case today, and that there are really creative ways to help you finance your dreams.
Always dig deeper into finding the answers from the professional. I always say, yes, talk to grandma, grandpa, mom, dad, Aunt Cindy, but please, they could have purchased a home 2 decades ago. That was a completely different market.
Seriously.
It could have been 1 year ago.
Home,
Yeah.
right?
Yeah, it's very
Never
different.
bought a home.
Kind of one last question here, good kind of a two-parter. How can buyers prepare to get pre-approved, and then what are some common missteps that you find that buyers take either while they're under contract or in the process of getting pre-approved? What's some advice you can give to buyers to get started?
Yeah, get started. I call this the magic twos. I think I'm the only one who calls it this, but get your magic twos ready. Get your 2 months of bank statements for your asset statements, bank statements, 401ks, 2 months of those, 2 full years of W-2s, 2 bank statements, just because most people are bi-weekly paid, so 2 months is a full month. And then get those prepped because you'll need those for your application. The next step will be working on your application. Get that submitted into a lender, and then having a team. So having a strong team of communication. So when you do get that pre-approval, you know where to take it to. You have a real estate agent who is connected with you, your lender, and can connect you with homes. Common missteps, I would say, other credit applications during the time of your application.
Well, it's the season of giving.
Yes.
What's
So,
this?
and
0%
they have
APR.
great options. They have great financing promotions right now.
I know. Don't buy a car is what we're saying.
Yeah.
Don't buy a car
When you're trying to buy a house. Yeah.
when you're under contract.
And another common one that I see and people just don't realize is you may have your pay stubs into me that show 40 hours, but over the course of the next month, don't just randomly take leave without pay or you reduce your hours, because that's going to go, we're going to have to look at that as variable income, and that will put you into a totally generally it'll be lower. Your income will be lower than a regular full-time employee. So, and this is what I tell my first-time home buyers is really, we take a snapshot of your credit. Don't make any changes to that snapshot on the day that we took that or pulled your credit. Same thing with your income, your employment, and your assets. So,
Yeah.
Well, thank you so much for coming.
Thank you so
and
much.
sharing this whole different perspective with us. So we had so many questions.
Yeah.
I feel like I've kind of synthesized it in my shopping brain.
Yeah, some really good analogies to shopping here that like simplify, but legitimately simplified how mortgage lending and mortgage brokers work. And I think they're great little nuggets people take away. Thank you so much for joining us.
You're welcome. You're welcome. Now let's go shopping.
Let's go shopping.
I think she knows the places to go.
I think I am cut off. I'm cut off.
I didn't wear the shoes for it. My dogs would be barking.
Oh yeah.
Okay. Well, thanks for listening. We'll
Thanks,
see you
guys.
next time.
Bye.
Bye.